Dominic Barton, Asia-Pacific Chairman for McKinsey. You've been speaking here at the World Knowledge Forum in Seoul, South Korea, about the outlook for China. Now, you're pretty bullish about the China market. Why?
I am bullish about the China markets. I mean, I do think that China is connected to the rest of the world. It's not independent, and so there definitely will be an effect. But I think from an overall GDP growth rate, if you look at consensus economic forecasts, we're looking at 2 percentage point drop on the sort of 10 point, and it ranges 7 to 9%, even as high as 9. So I think it's going to continue. If you look at it down at the subsector level, you see quite some differences, and that you see growth rates of companies. Some companies in some sectors growing at 40 to 45%, some at 0, some at negative, and again it depends. If you're a steel manufacturer supplying construction companies in Shanghai and in Shenzhen and parts of Guangzhou, you're probably in the negative territory, or at least down. You're seeing price pressure that's going on. But if you're in the software industry, you better be plus 50% in terms of what you're looking at. If you're in pharmaceuticals, it's around 20%. So it varies depending on the sector.
Generally, when you've been speaking to companies about the China market, what's been the level of confidence?
I think it's really in maybe two aspects, the confidence levels. For the foreign companies, we're seeing a lot more demand because they're looking for growth. And so this is where we're seeing a very substantial increase in the number of European and North American companies that are saying, how do we get our footprint right here? How do we participate in the growth? It's not as a sourcing place, it's going after those hundreds of millions of consumers that are moving into the middle class, roughly 270 million by 2015. That's a big domestic market to go after. So there's that push. Domestically, I think you're seeing rapid formation of the private sector, which has been going on for the last 20, 25 years. These companies are getting to scale where they can actually buy other companies. So we're seeing M&A activity, we're seeing geographic expansion within China like we haven't seen before, and encouragement from the government.
And companies moving outside China?
There's probably, I'd say 70 or 80 Chinese companies that, to use an American baseball, are on deck, ready to go global. And they've got the ambition. They kind of know where they want to go. The challenge is, how do you do it? Because there's not a lot of role models in terms of how to do that. Probably more in India than there are in China. But they're there. They're just getting to the scale now where they can do it. And often it's not to find another market. It may be to access. It may be for sourcing. It may be for energy. It may be for the supply chain aspects of it. It also may be for a capability that they want to inject into the place. Or it may be, in fact, that they are going after a market, but they've got a cost position or a capability that's much better than a North American or European player, and how do we participate in that market?
You mentioned energy there, and you were talking about infrastructure in the session. How significant do you think the growth in that sector will be?
Infrastructure is massive. I mean, 24 airports by 2010, the power sector, just the energy needs to fuel that growth when you've got, again, literally so many hundreds of millions of people moving from the rural areas to the urban areas. You got to have all that, the water systems, the energy, electricity, all of that to go with it. And so it's, we're talking about roads, bridges, 50,000 skyscrapers. It's over 200 cities with 1 million people. That all has to be built. And so you're going to see in many sectors, over half the world's consumption of those products being there. And that's why with commodity prices long term, I don't see the pressure coming off. They may not be as spiky high as they are now, but that demand will continue.
Just briefly on the subject of the credit crunch in the US, do you think that China will be able to offset in part the problems faced by the US and Europe?
I think they'll be able to help somewhat, but we have to sort of look at absolutes, and even why I'm very bullish on the growth and the future in terms of the size of the economy. It's, I don't know, just sort of between the UK and Germany, or it's not the biggest economy in the world yet, so it's difficult. It's not Japan in size. So I think it's difficult to expect that China's going to power us out. I think they can play a role. They definitely, and I think they will. And I think they can play a role in Asia, because if they're, they can help the Koreans, they can help the Japanese, they can help the Southeast Asians in terms of the growth as well. So I think they definitely can be helpful, but I don't think we should look at them as the pillar that's gonna pull us out. They're just not big enough yet.
Dominic Barton, Asia Pacific Chairman for McKinsey, thanks for joining us.
Thank you very much.